This is just a brief overview of the order flow candles, what they look like. Here's your bullish candle, here's your bearish candle. You can see some buy on your right hand side here. You can see aggressive buyers. On the sell side candle, you can see on the left side, you can see aggressive sellers in. You can see the total weight of the candle here in what we call the delta. That gives you an idea of what's happening inside the candles. So that's just a brief baseline overview of what order flow trading looks like. There's a lot more to it, a lot more details to it, but I'll get into that as we move forward. Here's to kind of recap my week. Monday, did not take a trade. Didn't find anything that looked good. Tuesday, took two trades, one for $1,350 in profit. Wednesday, took two trades for $450 in profit. Thursday, took two trades for $737.50 in profit. And then today, Friday, I just closed out a trade for $300. So let's dive into these trades and take a look at order flow in action. I'm going to let these videos run of these trades, and then I'll recap at the end. But obviously I cut down hours worth of footage throughout the week here, just for purposes of time, and I sped them up. This isn't actually how fast the markets run, but take a look at these trades, and then I'll recap at the end and give you guys some insight as to what the triggers were to getting in and out of these trades. Okay, so let's recap these trades. Let's take a look at what the trigger was here. So for trade number 1 on the week on Tuesday, price came down, broke below these lows, and then you could start seeing within the candles themselves, you could start seeing demand building in trade number 1. Then you see the downtrend here, broken here, and then price trades back into it here, and it retests one of my structure levels here, and so I go long. Took a trade here and kind of highlighted out this zone here where I was comfortable taking a trade. I took a 3 contract trade, and as you saw in the video, I kind of moved my target 1 down to capture some profits and then left a runner, and that one worked out very well. So that was a nice trade here. Trade number 2 was in the afternoon on Tuesday. It was a similar setup, almost the exact identical setup where price came down, broke through one of my structure levels, retested it, and then broke structure of the downtrend. It broke structure and then retested, and I got back in long here. I jumped a gun a little early on the long, but I tend to do that. And then I did the same thing here. I did a 3 contract trade, and then I ended up closing the whole thing out short because order flow told me to. Order flow got me out of this trade before it reversed back out. You could see selling pressure here on this candle, and this candle, and it pulled back, and then I got out right about here, and this one was a $512 winner here in total. That was trade 2. And then earlier in the day, just before lunch, there was a trade that order flow again kept me out of, so that I didn't get in. And so when you're dealing with this internal information from these candles, you have this ability to see, or the better ability to qualify your entries. Whatever your entry trigger process is, you can better qualify it by taking a look at buying and selling pressure within those candles to see if there is momentum behind your trade. Okay, so let's move into Wednesday. Was not my greatest day of trading. This was a big move down, and I was in it, and I pulled it. So instead of taking a massive win here, this thing I could have let ride all day. I never would have done it, but I could have at least hit target for a nice trade. I pulled it early because I didn't like that price didn't go fast enough. So I got impatient and pulled out. It was my fault. But I didn't lose anything on it. For trade number 1, I made $187.50 on, and lesson learned to at least give your trade some time to breathe, which I did not do. Trade 2 on Wednesday was the afternoon. I was a little bit upset still about me missing this big massive move down, that I pulled this one early as well, and I just called it a day after this one. So I made a trade on this one for $262.50, making the total on the day $450. So then moving into Thursday, I took my first loss on a pre-market trade. I gave this thing a long time, as you saw in the video, to materialize. It never did. Thought I was going to get something here. Came close to stopping out on this trade by 1 tick, and then it came back up, and I thought maybe get a reversal here. Did not. Never developed. Pulled it. Cut my losses. I lost $112.50 on this one. I only on pre-market trade, I only traded 1 contract on that one because there just isn't enough volume to justify the added risk. So then later on in the day, about an hour and a half later, just about that 9 o'clock time frame, I took a nice trade here on the S&P, and a similar structure to the ones I took earlier. Price opened up, chopped through the open as it typically does, dropped, took out my level, bounced off another structure level. And then here was the key candle for me, was right here. This snapshot, this one, take a picture of it. This is a textbook reversal signal. If you get this candle at a level, you better start getting ready to enter into a trade. You've got your buy side imbalances here at the top. You've got an open, and you've got it's a green candle, obviously. You got a nice long wick bouncing right off of a level. Your POC is below the body of the candle. That's textbook. You see that one? when you're about to enter, you better get ready to pull the trigger. So we broke structure, pulled back, got in right about here. This one I held on a little bit longer to target one. I took about 17 ticks on that one, and then let the rest run to target for a trade of 850 on the day. And then today was a disaster that could have easily gone backwards on me. I ended up getting bailed out of this one. What essentially happened was I missed the original trade, and then I tried to chase it. And whenever I do that, I never should have done this one, but I did it anyways. But I ended up getting bailed out of this one. But for a $300 trade, this one actually would have hit target here, but I was razzled by my entry that didn't go as planned, so I just pulled it and got out for a gain without losing. So to wrap the week up, weekly total $2,837.50. Total is 7 trades, lost on one, 85.7% accuracy. That's going to round it out for the week. So let me leave you with a few keys of order flow trading, at least in my experience, what I've seen to be the positive benefit of using order flow candles. You can visualize the executed orders much better in real time, understand what's actually happening within the candles. You can watch buyers and sellers step into the marketplace, especially at specific structure levels. It works really, really well. You can watch shifting demand or supply. You can ID areas where structure has changed. That's been critical as well. And I couple this with a very detailed market structure. But at the end of the day, I'm able to hold trades a lot longer with more confidence because I'm able to qualify those trade entries. Those are the keys as I see it, and I hope you enjoyed the episode. We'll catch you next time.